Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. So glad you're here. Well, what do we got going on in the markets today? Nothing. Markets are closed today. So why am I making a video? Well, I miss you guys. I like talking to you guys. We can still talk about some stuff, even though the markets are closed today. Now, when they open next week, what am I expecting? Well, we had that up day on Thursday, usually an up day before the Easter break, and then we usually have a down day on Monday. We'll see if that plays out. I do think we might get one more push higher before the market heads lower. I do think the market's going to start to head lower sometime next week. I think we're going to go down to the 3,400 level. Maybe we first push up to the 4,150 on the S&P, but then we come down to the 3,400. All this talk about a new bull market, I'm just not buying it. I think this market has a lot of downside risk to it left in it. We'll see how that plays out. All right, let's get over to the real estate market. What's going on in the real estate market? Well, you know, it's kind of the calm before the storm. You see, there's not a lot of transactions going on right now. Now, why are there so few transactions? In most area, the number of sales are down by 30 to 40% from this time last year. Why is that? Why? Well, basically nobody's happy. Nobody's happy. Look at the sellers. They're not happy because they want to get the price Billy Bob got, right? So they're just going, well, I'm just going to sit this out until wait for the prices to go back to where Billy Bob got. Now, the buyers, they're definitely not happy, right? Because the prices are still elevated, but so is the mortgage rates. Mortgage rates went from 3% to 7%. So they got to pay this high mortgage rate. They're not happy because they can't afford the home at these prices. So you got the sellers aren't happy. The buyers aren't happy. Nobody's happy. No, there's no meeting of the minds. There's no transactions happening. This is the calm before the storm. So what do I think's going to happen? Well, eventually, I think the sellers are going to have to lower their price. Now, it is possible that incomes increase enough so that the buyers can afford at this level, but they really can't. But the sellers are kind of stuck right now. The sellers are stuck. Now, here's why. You see, my generation, the baby boomers, if you will. Anyways, what we did is we traded up a lot. We would start with the starter home, then we'd move to the next one, and then we'd move to the next home. And that's how we got to those big McMansions. A lot of baby boomers live in the big McMansions. Okay, so how did they do that? Well, what happened for the baby boomers? Well, they'd buy here, right? Okay, and then interest rates would come down. You see, interest rates have been coming down for the whole baby boom life, really, from the 1980s till now. Interest rates went from 18% down to 0%. So they would gradually come down lower and lower. So, okay, so they bought a house here, let's say 100,000, let's say it goes up to 150,000. Well, the interest rate was at 18%, then it dropped to 14%. So their house value went up, but the mortgage rate went down. What did that allow them to do? It allowed them to sell their property, take that money, take that equity, put it down on a bigger home, and if an even lower payment, their payment would be going down, getting a bigger home almost for free. Well, what do we got now? Let's say you bought that starter home now, right? Let's say you bought it. Well, you just bought it, right? Let's say you bought it a year ago, okay? Or you bought it 2 years ago, doesn't matter. But you bought a starter home, all right? And you bought a home that's too small for you because you're raising a family, right? And you just had a new baby. You want an extra room for the baby to grow up in. So, but you don't have a big enough house because you were living in this little townhouse, right? But you want to upsize into a regular house. Well, what happens now? Okay, so you're locked in at a 3% rate on your townhouse, okay, and you want to move up. Well, if you move up, you got to get rid of that 3% loan, and now you got to get a 7% loan, but you also have to pay a higher price to move up. So the move up can't happen, right? Doesn't happen. No way. Can't do it. Can't afford it. It doesn't make sense. Now, could you downsize? Well, you could downsize, but once again, you're giving up that 3%. See, some people that live in the McMansions, they want to downsize, but they get locked in at that 3% rate. If they downsize, their payment's going to be about the same, and they're going to have a smaller place. So why do that? Doesn't make sense. So everybody's frozen, right? Everybody's in limbo. Nobody can move. Nobody's happy. Sellers not happy. Can't get what Billy Bob got. Buyers aren't happy. Can't afford these prices. So the number of transactions has come basically to a standstill by us real estate agent standards. We like to see more activity. We can make more money. No realtors are making money right now because there's not enough transactions for them all. And a lot of realtors will go out of business eventually. But eventually, you see, houses will not be able to stay at the current level. They won't. Will they be going up? I don't think so. I think they'll be coming down. Now, why can't they stay at the current level? Because a lot of people that live in the house right now cannot afford the payments. They cannot. And what they got going up? They got expenses going up. They got property taxes going up. They got the heating bills going up. They got the repair costs going up. Home ownership is expensive, and a lot of people don't realize that until they buy a home and then they go, oh crap, I can't afford this house. So what do they got to do? Well, eventually they're going to be on the market, back on the market. They're going to be a forced seller. Some people are going to be forced sellers just because the recession's coming, because the layoffs are coming. Now, I want to talk a little bit about this. Now, this can be a little bit scary for people, but there's a recession coming, and it could lead even into a depression. Okay, now, Mike, it couldn't happen. Look, layoffs are up 500% this year over last year. Okay, 500% layoffs are booming. Every day there's a new announcement. Layoffs. Of course, we're not in a recession yet, but all these people are getting laid off, and these people make a lot of money, and they have mortgages to pay, and they can't make their mortgage payment anymore. Now, small business filing for bankruptcies, it's at the fastest pace in history. The fastest pace in history. Just this year, 183 major small businesses have already filed for bankruptcy, just 75 in the last month. Okay, that doesn't sound like a lot, but these have jobs. These aren't small companies. These aren't mom and pops. These are small businesses that hire hundreds and thousands of people, and they're going away, right? The layoffs are here. The jobs are going to disappear. Okay, but that's not what really scares me. What really scares me is that the financial system is on the brink of collapse. It is. I mean, you know, do not talk to your family and friends about this stuff, but you like this channel, so we're going to discuss it a little bit. All right. So what's happening is the zombie companies are going out of business. The ones that can't afford to even make their interest payments on their debt. They don't bring in enough cash. They're going to go out of business. People are going to lose their jobs. But that's not what scares me. Sure, people lose their jobs. Houses are going to come onto the marketplace. But what really scares me, to be honest, is what's called derivatives. Okay, now derivatives, for example, you have the NASDAQ, right? It's a stock exchange. It's the NASDAQ, and the NASDAQ is real, okay? It's real companies, real businesses. But then you have a derivative. It's called the QQQ, right? The QQQ is a derivative, okay? So, but then you take that QQQ, and there's double it, triple it. Those would be called TQQQ or SQQQ. Those would be the double or triple leveraged ETFs, right? But then you take derivatives on top of the derivative, on top of the derivative, on top of the derivative, and you got options on, let's say, options on the SQQQ. You could play a put option or a call option. Those are derivatives. Okay, derivatives on top of derivatives on top of derivatives. We're talking quadrillions of dollars, not trillions, quadrillion. Now, the government they can print enough money to bail out the banking system. I agree with that. But the black swan event that's going to be coming is going to be in the debt market. Now, not the regular debt market, not the treasury bonds, not the T-bills. Those will get paid. Where it's going to hit is in the junk bonds. The junk bonds, you got the zombie companies. Now, these zombie companies borrow all this money, right? They borrow a ton of money. And it's called junk bonds. Now, you have derivatives on the junk bonds. For example, I look at the HYG. That's an ETF. Okay, now that's a derivative. Now you can go farther out. You can get options on the HYG, which be derivatives on top of derivatives. But let's just take the HYG. Now $3 billion a day flows through this. Okay, so they're an ETF of junk bonds. All right, so they actually, now I'm not smart enough to know if they own enough junk bonds to match the flows of funds in and out of the ETFs. But the junk bonds are owned by the zombie companies. The zombie companies are going to be going out of business, so these junk bonds are not going to be getting paid. So what happens to these junk bonds? Well, they become worthless, right? Company goes out of business, the bonds don't get paid. So they become worthless. So let's say you're trading the HYG. Right? Now the HYG owns all these junk bonds and the zombie companies don't pay on them. Well, they become worthless. Well, where does happens to the HYG? The HYG goes down, right, to zero along with it. Now, who owns these junk bonds? Who owns the HYG? Who invested? Now, me and you, we could go buy a share of the HYG and that would be us in there, right? But when this explodes, and it will explode, take my word for this, it can be the black swan that brings down the system. Because when the junk bonds go, so do the pension funds. All right, the pension funds, trillions and trillions of dollars that the government will have to print to bail out the pension funds. Yes, the pension funds will probably get bailed out, but the amount of money they're going to have to print to bail out the whole financial system when it comes down is in the quadrillions. Right now we're 32 trillion in debt. Do you think the government can print a quadrillion? Maybe they can, but what's that going to do to the currency? The currency is going to lose all of its purchasing power. Now, it is my opinion that the currency is already lost all of its purchasing power. The only thing that gives it purchasing power is the confidence, okay? It's a con game. It's a Bernie Madoff, right? It's bigger than Bernie Madoff. It's bigger than the Bankman-Fried dude, that FTX. It's bigger than that. It's the biggest Ponzi scheme the world has ever seen, right? The government, it prints the money, but there's no way in the world, and now this is just simple math. This is just math, right? We do not bring in enough income to ever pay off the current debt we have, let alone the unfunded liabilities, let alone the quadrillion that they would have to print to bail out the financial system. So when the financial system comes down, everything comes down with it. The stock market, the bond market, and, well, of course, the housing market, except not in your area. Your area will stay up when the whole world collapses. But this is scary stuff, right? And I'm doing this on Good Friday. I don't want to scare you right before Easter. This is a long Easter weekend, but that's my take as to a black swan event that could bring down the whole system. But just before that happens, there's going to be all these layoffs from the zombie companies, right? So let's say the government can print enough money to paper over the banking crisis that we're having right now, right? Okay, so they just keep printing the money and they keep filing it into those banks, right? And keep the banks afloat. Okay, I believe they can do that. I believe they can extend this another 6 months, another year. Can they extend it another 2, 3, 4, 5 years? I'm not so sure they can. I think the system will come down in the next 5 years. I want to be wrong on that. I want to be really wrong on that, because you're not going to recognize the world that we become when the system does melt down. But before that happens, okay, so let's just talk about the layoffs. The layoffs are hitting the people that have the mortgages. 63% of the U.S. lives paycheck to paycheck, so 63% of the mortgages mortgages are not going to be getting paid. This is a big problem. This is going to create the inventory onto the marketplace that's going to bring the housing market down. Now, if you're a seller and you're sitting back going, hey, I'm going to sit this one out, you may want to start thinking twice about that and getting ahead of the game here, putting your house on the market if you're thinking of selling and getting out. You can get close to what Billy Bob got. You cannot get what Billy Bob got, but you can get close to what Billy Bob got. And it's going to look really good a year from now, because a year from now, prices will be much lower. Once again, these are just my opinions. Look at everybody in the comments. You can tell me I'm dead wrong, and that's okay. I'm okay with that. I want to be dead wrong. People think I have something to gain by telling you the house market's going to come down. I have absolutely nothing to gain. I have a lot to lose. Real estate's my life. I make my living selling houses. That's what I do. I don't want the housing market to come down. I would love to see it double from here. I'm a realtor. It's always a great time to buy. Well, I'm Tall Mike. Get out there, everybody. Have a great Easter. Have a great long weekend. And hit the subscribe button so I can talk to you on Monday. Don't forget to give me that thumbs up, though. Bye-bye now.